Hey guys, it's JP. Every single month at my company, FundWithCredit.com, we take clients through SoFi to get a high limit personal loan, and we are able to secure all of our personal loans through them completely no doc. Now, the amounts vary. Sometimes it's 30K, 40K, 50K. A lot of times it's 50K. But we have had no doc approvals on those personal loans as high as 70K. Now, that's not as common, but we have had it. So what I wanted to share in this video is the exact strategy we personally use to get those no doc personal loan, so that if in the event you try to go through SoFi or you need a personal loan, hopefully this is helpful to you. So the main thing I get asked is, John Paul, you are a 0% credit company. Why do you get personal loans? So we use personal loans for a multitude of reasons. It may be that a client has pristine credit, but they have higher balances on their personal credit cards. If that is the case, we will use the personal loan funds to pay down their personal credit cards to a level that is acceptable, that we can then go for 0% business credit. Other times, someone just may be at the end of their funding round. They've already secured 0% business credit, and now they just kind of want some more personal capital, and they just want another 50K to put into something because they have some form of opportunity to put that money into that they're going to get a pretty nice return, and they don't really care that it has an interest rate. Other times, they may have already a few business cards. There's balances on the business cards, and we actually use the personal loan funds to pay down those business cards so they have acceptable balances. Then we can go get more business credit. So there is a lot of reasons why we use personal loans whenever we're going through a funding process with a client. And I kind of forgot to mention this one, but a big important part of our process is, when we are setting up or preparing to fund a client to get 0% business credit, whenever we set up a business bank account at a bank, so let's say that we're going to go get capital at Chase, we would set up a Chase bank account, and we like to put capital in the Chase bank account before we go apply for money there, because it just makes us look a little bit more credible, and it makes Chase happy because we have capital there. Now they trust us a little bit more with a higher credit limit. So those are pretty much the four main reasons that we secure the personal loans. But again, every single time we do, it's completely no doc. So that's pretty much the reasoning why we personally will use the personal loans. Now, when it comes to actually securing these, so what I'm going to do is I'll run through step by step kind of what the application process looks like. But what I'm not going to do today is I can't give you for sure numbers on what to say on the application to get the approval, because it genuinely is fully dependent on the personal credit report. We do not, with any of our clients, ever use the same data points because every single person's situation is different. I see a lot of videos online where guys who either think they're a funding company or they are a funding company, and they just make a YouTube video and they give you exact data points to put. Well, the problem is a lot of people end up burned in that situation and dissatisfied because those data points don't work for everyone. Everyone's situation is different. So I'm going to give you multiple scenarios as we go through here so you can kind of assess your personal situation and you can see what makes the most sense for you. I just don't want to do you a disservice by giving you, hey, say this, say this, say this, and then you get bad results. It's that honestly would make me feel a little bad. So I'm not going to do that. So let's get into it. If we are going to SoFi to get a personal loan, now I don't know if this is a prerequisite to get approved there, no doc, but it's just something that I always personally do. So every single funding play that I ever do for clients, I have personally ran through myself because I do not like using a client as a guinea pig for a new funding play. I always run me, my business, my personal credit report through a play before I send anyone else through it. So with SoFi, when I figured out that we could get no doc approvals there, I did this play myself. And whenever you are getting ready to apply for SoFi, I always use a personal referral link. Always. I'm not sure if it helps. I just feel it looks more credible if you use someone that if someone already has a SoFi personal loan, it helps to use their referral link because they have a loan in good standing. So if they're referring a person over, I feel like they honor that more. Whether that's true or not, I don't know. I just always use a personal referral link. So that I'll have to test that to see if it actually really does matter. It's just what I always do. So after you are into the application, it's going to ask you, what is the purpose of the loan? Now, what you put here is very important. Now, if you say that you are consolidating credit card debts, so let's say you have high credit card balances, you can put here that you're going to consolidate credit card debts, but banks are sometimes a little bit skittish when it comes to someone has very high personal credit card balances and you say that you're getting the loan for credit card payoff. There is a potential that they're going to ask for docs in that scenario. I don't really know why. I think it's just because you've ran up your personal credit cards. So if you're asking for a personal loan to pay down your credit cards, I think they just want to make sure that you're making enough money to take care of those loans, because like if they're going to give you a no doc approval, they're basing it entirely on your credit report. And if your credit score is really low because your credit card balances are high, it's probably not going to be that great of a scenario. There's a chance they may ask for docs. They're probably not going to give you that high of a limit. And the interest rate is not going to be something that you like to look at. It's going to be high. It's probably going to be in the 20s, maybe even 25%, which, it stings a little bit to stare at that. I mean, would it shoot your credit score up? Yes. But that's just kind of what I'm going to say there. Like a lot of times whenever I'm running this play, I'm not taking someone through this that has maxed out credit cards. If someone has maxed out personal credit cards and their score is a 600, I'm not going to run them through this play, mostly because SoFi is not going to lend to that person. There are very few personal loan programs that will lend to if your credit score is that low. So if your credit cards are maxed out, you need to make sure that your score is high enough, like at least above a 680 to even try. But a lot of times, this is for if I have a client that has like 40% utilization, maybe 50% utilization on their credit cards. But I will usually either do loan consolidation as the reason for the personal loan, or I will use major purchase. Major purchase is the most credible because it doesn't look like you're having money problems. You just want to get a personal loan because you're about to do something major, whether it be build your deck, you're going to buy a boat. I don't know. It just looks like you're pay for a wedding. I like to use major purchase, but if I have other loans on my profile, I use loan consolidation a lot. So if someone has student loans, an auto loan, maybe another personal loan, along with the credit cards, I will do loan consolidation. And loan consolidation seems to get no doc approvals pretty easily. I'd say I probably use it the most. But you can't use loan consolidation if you don't really have loans. If you only have a mortgage, you have a mortgage and it's like, you have a balance of $300K on there. It doesn't really make sense if you're getting a $50K personal loan as a loan consolidation, because like you're obviously not going to refinance your mortgage with that personal loan. So you have to do what makes sense. If you have other loans on your profile, I would do loan consolidation. If you don't, then it probably makes more sense for you to do major purchase. And again, just to be fully transparent with you, if you want $50K no doc from SoFi, it's not going to happen if your score is too low. If your score is below a 680, you have high personal credit card balances, or you have late payments or something like that, you can try this play, sure, but I can't promise you it's going to be no doc. A lot of the people that I run through this play are very credit qualified. So our cap at FundWithCredit.com to even accept a client is a 740 plus. So most of the people that I am running through this play are a 730 to 740 and above. And that probably explains why we get this no doc. So I just want to be fully transparent with you. If you have, this is not a loan you go get if you have suboptimal credit. This is a good credit style personal loan. So the loan purpose is really going to matter on what your credit report looks like. Again, if you don't have if you don't already have loans, you don't want to put loan consolidation because it doesn't make sense. You would want to do major purchase. But I either do loan consolidation or major purchase. Now, the next important piece is once you go past here and you're to the income, a lot of people online, like I said, will make a video like this and they'll just say, oh, just put 200K on the application and you're fine. No, that doesn't work here, because whenever a bank is going to issue a loan based on your credit report, they want to see what your debt to income is. So if you have, let's say, a mortgage, an auto loan, some student loans, and you have a little bit of balances on your personal credit cards, Well, there's going to be a certain amount of monthly payments. And let's say that your total monthly payments for all of your bills is $5,000 a month. If you apply for a SoFi loan and you say that your income is $10,000 a month, but your expenses are $5,000 a month, they are not going to lend you that money because your debt to income is already at 50%. So your monthly payments are 50% of your total amount of income you make per month. They are not going to just throw another loan on top of that because that looks way too risky for them. So debt to income is really important here. If you have basically no monthly payments, you have no mortgage, you don't really have an auto loan, or if you do, it's only a few $100 or $500, and your credit cards are pretty much at below 10%, and your total monthly payments are, let's call it $1,500 a month. In that scenario, you could put that you make $10,000 a month or $120,000 a year, and they would issue you that loan because your debt to income is only like 15% of what your actual income is. So that would be a fine scenario. So what I always do is I adjust it based on the situation of the person. So if I look at their credit report and I see that they have, their monthly payments are $5,000 to $7,000 a month, then I have to put very high income on that application. I may have to put as high as $250,000. So for it to make sense, because $250,000 a year, that'd be around like $20,000 a month. If their expenses are $5,000 to $7,000 a month, now there's some wiggle room there. We can add to their debt to income, and it doesn't look like it's that crazy. You would kind of want to stay below the debt to income ratio of, I'd say 40% is like the maximum. A lot of times when you're going to get a mortgage, that's what they look at. They want to see that your debt to income is below 40%. And if they add this mortgage to your profile, is it going to take you above 40%? Some will go up to 50%, but a lot of times they don't want to see your debt to income go above 50% because then you look risky and you may not be able to pay the loan. So that's pretty much it. After that, what they do is they will give you a pre-approval, and then you can choose. Sometimes they give you more. Like I have requested $35,000 before for a client, and then they pre-approved them for $60,000. You can adjust the scale here, but you have to keep the debt to income in mind because we have before been pre-approved for $35,000, or I'm sorry, pre-approved for $60,000, but we requested $35,000. So we took it, we wanted actually a $60,000 loan, not $35,000. And then when we were going through the final steps of the process, they asked for docs. They asked for bank statements. They wanted us to connect the bank account so they can get an idea of the financial picture. So what we did in this case is I actually canceled the loan, and then we came back later on and requested, I think it was like we came back like 2 days later, and we requested the $35,000 again. We got the same pre-approval for up to $60,000. The difference is instead of asking for $60,000, we asked for $40,000. And then at $40,000, they let us go through the process, no doc. So we still ended up no doc, but they did ask for doc. So there really is it seems like it's so simple, but unfortunately it's just not that simple. There's a really specific strategy here. You want to make sure that you are just staying below their risk parameters. And sometimes they will pre-approve you for a decent bit, and it's true, you are pre-approved for that much. But whenever you accept the offer, so it's a soft pull to get pre-approved. If you accept the offer, it's a hard pull. And at the hard pull, they could ask for docs if they want to. If they decide it deserves a second review, they can ask for docs. So you want to just always make sure that you aren't getting too greedy and too aggressive, because it's very easy if you get pre-approved for like $70,000 to want to go for $70,000. But if you've never had a loan that high in your profile before, it's really, really hard to get that high of a loan without them wanting to see some income. If the highest loan you've had before is an auto loan and it was $25,000, then you should probably maybe stick for a $30,000 or $35,000 loan. In my case, like I said, I've tried every funding play I've ever ran a client through at FundWithCredit.com. So I had a $50,000 personal loan before on my profile. So me getting $50,000 or $70,000 no doc isn't that big of a stretch, because I've had the same debt product, personal loans, and I've had a personal loan as high as $50,000 before. So them upping me to $70,000 isn't that crazy of a situation. So I'm going to try to recap this. I know I'm kind of rambling. whenever it comes to the question of even if you should run this play, you really need to take a look at your credit. And if your credit report is suboptimal, your score is low, your balances are too high, then you should try to figure out a way to take care of that. Or if you have a suboptimal credit, but you have really good income, then you could still try it. Try to get the pre-approval. And if they ask for docs, you have the docs. It's not that big of a deal. It's just if you're trying to go about this completely no doc and get the funds in the next 24 hours, because that's usually how it goes. If you get approved on, let's say, a Thursday night or a Thursday evening, you will get the funds the next day on Friday. So it's a really quick turnaround if the whole process is no doc. But if your goal is to get it no doc, I would be very careful. I would make sure to really review the situation thoroughly before pulling the trigger, because if you go through the process, you can always cancel the application, but it's not good to go through a bank's process. And if they ask for docs and then you just decide not to give it to them and just kind of let the application expire, they may ask for docs again in the future because they asked for docs before. You kind of just let the application expire. Like I said, each scenario is different. So, and if you do decide that you're in a position and you want to try for the loan, then move forward. And I would do if you have other loans in your profile, do loan consolidation. If you don't have other loans in your profile, maybe try major purchase. Because if you have a wedding coming up, you're going to pay for. It makes sense, and it doesn't seem like you need the debt, or you need the money. And then from there, what you put for income on the application really does matter on what you currently already have on your credit report as debt to income. Very, very, very important, because like I said, if you make $120K a year, but your yearly expenses is $60K, they are not going to add another $1K or so onto that because you were already at 50%. You need to take your income higher. In that same scenario, I would put the income as high as $225, $250. And then in the event that you get the pre-approval, sometimes it makes sense to go for the maximum amount. Other times it doesn't. For me, I could get $70K. No doc, no problem, because I had the same debt product, personal loans. I've had auto loans that are near that amount. And it wasn't that crazy even ask for me to go for $70K. So in this case, you have to do what makes sense based on your profile and what other loans that you've had. And a mortgage is a little bit different. Like if you've had a mortgage, you still may not want to go for too high of a loan, because a mortgage is a whole different product. All homes are expensive. They're never not hundreds of thousands of dollars, if not millions of dollars. And it's also, those loans are secured against the asset. When you're going for a no-doc loan like this, it's unsecured. You're not securing anything against this loan. You're not even putting docs on the application for the loan. So when it's a product like this, and you're not using anything other than your personal credit report to secure that product, then you need to do what sounds reasonable. If you have 5 personal credit cards, the highest, and you have, let's say one of your credit cards has a $10K limit, but you have no other loans other than your mortgage and your credit cards, then I would probably not try to go higher than like 30 to 40K. Just because if you go for 50, there is a chance that they ask for docs. Now you can always do what I did before, which was cancel the app, come back in 2 days later, and then you try again for a lower number, and that worked, and that has worked multiple times. But I'm trying to just make sure that with this, you have all the information you need. So when you were going into this, you can hit it with the most accuracy. But that's all I got. This video is just about SoFi. That's exactly what I do when I'm taking someone through it. I just review the situation thoroughly, do what makes sense. And to date, every single SoFi loan we've gotten is no doc. We've had them at 30K before. A lot of them are around 50K, and I've even gotten 70K from SoFi, completely no doc. So this is what I would do. That's all I got.